Forex. To make it even easier for investors, Stockopedia has built a proprietary ranking mechanism called StockRank, which ranks stocks using and analyzing different metrics for the three most used screens: quality, value, and momentum. In the quality ranks, the system uses 9 different ratios to rank the stocks from best to worst. These rankings start from 1 and go up to 99, with 99 being the best. So let's say if you put greater than 90 as the quality rank filter to screen stocks, the system will show the top decile of quality stocks and eliminate every other stock from the potential stocks list. Similarly, the value stock rank system uses these 6 ratios to rank stocks. These ratios fall under 3 categories: earnings, assets, and income. Lastly, there is the momentum screen, which focuses on ranking stocks based on their price and earnings momentum. The momentum rank uses 9 different ratios: 4 for price momentum and 5 for earnings momentum, making the system rather robust. The rankings make the job much easier for an investor. Instead of putting a barrage of filters and criteria, the investor can select any factor and simply put a rank filter to get the list of stocks. Also, one can combine different factors by putting in far fewer filters. Stockopedia also highlighted a couple of case studies showing how the average person can use their platform to do stock analysis, if they want to take a deeper look at some of the names from the screeners. For example, here is a fundamental and technical snapshot of Plus 500, a stock that showed up in the quality and value screen back in 2017. The stock had a quality ranking of 95 and a value ranking of 89. The return ratios vindicated the high quality rank of the company, and low readings on most valuation ratios depicting the undervalued nature of the stock. A high Piotrowski F-score highlighted improving efficiency, productivity, and liquidity. For those interested in the Piotrowski score, we produced a video solely focused on its principles and performance over time. The company also displayed an extraordinary long-term earnings growth trajectory with 65.8% earnings per share over the last 6 years and 78% over the last 3 years. The operating margins and return metrics remained consistently at elevated levels. Additionally, the company frequently beat analyst estimates, and the management remained confident in the company's outlook, as can be seen in regulatory releases by the company. The management's confidence also percolated into generous buybacks, amounting to £509 million since 2017. The company also adopted an aggressive yet effective marketing strategy that propelled its growth. In a nutshell, the company displayed robust quality fundamentals, excellent growth and valuations, expectation-beating results, and regular share buybacks, making it a perfect quality and value stock to be included in the portfolio. The stock also followed suit and more than doubled in less than a year. The second case study was Kia Group, which ranked very high on the value parameters but languished on quality, momentum, and growth parameters. The company was extremely out of favor with the markets as its stock price fell from £9 to £4 in just 1 year. Its operating margin was under pressure at 3% and was barely positive in the last 5 years. Its return ratios were below the industry average and quite volatile. The company was also facing liquidity pressure, with its current ratio below 1x and quick ratio at 0.62x, with a high increase in debt. Average shares were also increasing, highlighting shareholder dilution to raise money for a cash-guzzling business. The bad shape of fundamentals led to downward earnings revisions by analysts covering the stock, and the downward spiral was further accentuated by the resignation of the company's CEO. To top it all up, the industry was in bad shape, with its peers going belly up. In a nutshell, the company had a downward momentum, under pressure quality, liquidity concerns, management changes, and collapsing peers. Unsurprisingly, the stock tanked further to less than 50p in 2020, before recovering to £1.30 now. Remember, it is often the case that expensive gets more expensive, and cheap often gets even cheaper, and Kia Group certainly got cheaper. In my opinion, the study is a clear example of how to make your job much easier as an investor or trader. Filtering out poor-performing companies help you significantly narrow down the list of investable stocks based on your preferences. To make that job even easier, Stockopedia's stock rank system lets you set those screens with relative ease, saving you from getting confused with a sea of usable fundamental metrics, whilst moving the odds of success into your favor. Finally, no matter which strategy you choose, there will always be some high flyers that you will miss in stock markets, but that's not a tragedy. If you have a decent process and you follow it well, there will be little scope for disappointment in the long run, despite facing volatility in the short run. For those looking to take advantage of a 25% discount in the Stockopedia platform, simply use the links below. For those with a bias towards trading whilst also including key fundamental aspects, we also offer bespoke scanning software